And now to those earnings we mentioned earlier. A Caterpillar had a quarter few investors saw coming. The world's largest heavy-duty equipment maker reported profits that trounced expectations. The company also gave upbeat profit guidance for the full year, and that lifted shares. Brennan has more on the big cat's blowout quarter.
After 4 years of sales declines, the world's biggest maker of heavy machinery snapping its losing streak. Caterpillar reporting an 18% jump in revenue for 2017 as mining and construction rebounded around the globe. On a call with analysts, CEO Jim Umpleby saying economic indicators are positive and he expects a strong start to the new year.
We are positioned to capitalize on continued sales momentum or quickly adjust should conditions change. We also plan to profitably grow the company by investing in expanded offerings and services, the two additional major focus areas in our strategy.
After a years-long slump tied to the collapse of commodity prices, sales are picking up across all of Caterpillar's major segments. Construction, energy, and mining equipment are all expected to grow this year. And just as aggressive restructuring within the company has taken root. Analysts say Caterpillar is poised to prosper.
2 or 3 years ago, it's just interesting that they had been in, and still are, really the longest and worst revenue downturn in all of CAT's history. And really, as they come out of this, probably inclusive of the Great Depression. So for whatever reason, mining bubble that popped and oil and gas bubble that popped, they happen to be quite low. And since they've started to come out of this, they've got their production systems working. They've got capital to actually manufacture the product that's coming back, and there's a lot of pent-up demand.
Also in focus, tax reform. The company taking a one-time charge of nearly $2.5 billion to write off changes in the way they have to account for previous losses and also overseas cash. Overall, though, the company says tax reform is a long-term positive. And analysts add Caterpillar could benefit not just from a lower U.S. rate, but also from full expensing, which incentivizes other companies to buy more equipment. But there are challenges. Executives hope to get a resolution to an ongoing tax investigation tied to a Swiss subsidiary soon. And as commodity prices do recover, costs to make all those machines are rising. Still, it was a strong quarter for a blue chip stock that's already soared 70% in the past year. For Nightly Business Report, I'm Brennan.